Hi, morning everyone. Welcome back to Morning Cup by 8. Aiman here. Okay, so looking at the S&P 500, it closed significantly higher on Wednesday's session, surging around 1.46% to close above the 7,300 level, hitting a fresh record high yesterday, right? Overall sentiment was very strong with broad-based buying seen across the market as well. The rally was mainly driven by the strong corporate earnings, especially from the semicons, the tech companies, where results came in above expectation and boosted the confidence in the growth outlook as well. Um, we noticed that also the sentiment was further supported by optimism over the easing geopolitical tension as progress in the US-Iran discussion raised hope for um, reduce supply disruption and also lower oil prices. Overall, I think the move reflect the strong recent movement, right? Supported by both earnings and also improving macro sentiment. Moving forward, I think the market is expected to stay firm with upside bias, but yeah, we do not discount for any consolidation to happen after the recent strong rally, right? Looking at the China A50 futures, well, it closed significantly higher also on yesterday's session, right? Showing strong upside momentum and pushing towards the recent high, right? The sentiment turned more positive with strong buying interest across uh, the large cap stock as well. I think the rally supported by the broad strength in the global equity market, lifting the overall sentiment and spilling over into this China market, right? We also seeing some technical buying as the index pushes higher with momentum-driven trades coming in as the market breaks above the recent consolidation zone, right? However, I think despite the strong move, investors are still cautious on the I would say long-term economy outlook. But now, if you look at the technical side of things, the index has breached above the previous resistance and should the bullish momentum to persist, we expect for the index to trend higher to test the 16,000 uh, resistance level, right? If you look at the WTI crude oil futures, right, well, it fell sharply on yesterday, right, dropping somewhere around 7%, right, and slip back below the $100 level. I think sentiment is now looking at the bearish side of things with heavy selling pressures in across the session. So the sharp decline was mainly driven by uh, growing optimism for potential US-Iran peace deal, which could lead to the reopening of the oil lane and also a return of the disrupted oil supply to the market. Also, at the same time, I think reports also showed that a weaker demand signal um, and also declining fuel consumption, adding further pressure to these WTI prices. Right. Overall, I think the move reflects a sharp shift in sentiment from supply disruption to potential uh, recovery, triggering aggressive selling into the market right now. Looking at our local market, well, the KLCI closed higher yesterday, gaining around 0.5% to close at 1756 points level, while the FKLI surged even higher and also stronger momentum yesterday, reflecting more aggressive buying interest. So overall sentiment, I would say, turned positive, but still selective for the uh, KLCI, right? I think for our market, the upside was supported by the stronger global market sentiment as well as the major indices, like I mentioned just now, US market, right, continue to trade uh, near high, which lifted the risk appetite across the region. So yeah, I think stronger move in the FKLI suggests the short covering and also uh, positioning ahead of further upside, indicating improving near-term sentiment among the traders. And also in terms of the KLCI, right, on the macro side, I think Malaysia's resilient domestic economy and also stable interest rate outlook continue to support the market as well. So, talking about the interest rate, right? I think do watch out for today's MPC meeting that should decide the OPR, which is on today, lah, right? However, despite the strong move on both KLCI and also FKLI, overall participation remains selective, showing that investors are still cautious and not fully risk on. Yeah, talking about the overall participation, I think our market was supported by steady gains in banking names such as Public Bank, CMB, alongside we have a strong buy in construction heavyweights like Gamuda as well, Sunway as well, right? So the positive tone was further lifted by strength in utilities, particularly in the YTL power, while mixed performance in the plantation and also selected consumer stocks limited the overall upside, right? Also, I believe yesterday tech garnered some attention, and if you see here, it is the top gainers, followed by construction and also utility. So maybe if you're looking at names to trade, right, you can take a look at this few sector lah, right? So yeah, looking at our Malaysia trading stock. So today we have Maxis. So the stock is on its breakout formation higher at 3.65 cent level on the strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the 3.80 cent for the first resistance. Second resistance is at 3.95 cent. And if the stock clear below this 3.50 cent support, this could reverse costs to a bearish structure. And also next we have SP Secure. So the stock is experiencing a breakout as well. We're again 10 cent level. Second resistance, the first resistance is at 1 ringgit and 20 cent level. Second resistance is at 1 ringgit and 30 cent level. So do keep an eye at the 1 ringgit level for any attempt of reversal. So for Malaysia trading stocks, we have two breakout stocks, which is Maxis and also SP Setia. So do monitor closely for these two potential stocks. Right, and lastly for the FCPO, well, it pulled back, I would say slightly on yesterday's session, but overall prices are still holding firm with the broader bullish trend remaining intact. So yeah, the slight pullback from yesterday was mainly due to the profit taking after the recent rally, right? As I think price had moved quite 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 positive for the past few sessions. However, the overall bullish tone is supported by the stronger crude oil prices as well, which continue to boost the palm oil market. Also at the same time, I think the recent report highlight that the biodiesel demand is expected to stay strong, which will continue to support the FCPO going forward. Yeah. Overall, I think yesterday's move looked like healthy pullback within this ongoing uptrend rather than a change of direction. So yeah, we still hold our positive trading bias unchanged, targeting for this 4,800 level and also 4,900 level. And our stop loss remains firm at 4,500 level. Right, so touching a bit on our campaign that is still going on So you can stand a chance to win a Tesla and also iPhone 17. And if you trade with us, right? So do open account, trade. So the more you trade, the higher the chance to win. Right. So I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Thank you, Aiman. Morning, everyone. Today we have a short piece on healthcare, which is a sector update. We are still overweight on the sector. Topic unchanged, which are KPJ, LAC Med, as well as Duo Pharma Biotech. So in this report, we talk about two recent news flows. One is relating to World Bank's recent study on the centralized claims database. So this, in this report itself, they indicated that 67% of the cost growth in 2022 to 2024 is actually driven by higher utilization rather than pricing. So pricing actually takes up 26%. The cost growth in this context, it's mainly on medical inflation. So they are saying that, you know, the medical inflation is actually driven more by higher utilization. The report itself, quite condensed report, it also highlights two structural issues in private healthcare settings. Number one is the high incidence of avoidable inpatient admissions that could be managed by primary or outpatient settings. And number two is the dominance of hospital supplies and services, HSS, billings, which is susceptible to overservicing and provider-induced demand to kind of, you know, optimize revenue. So HSS, this is a portion of the bill that is largely unregulated, and typically this accounts for about 70% of total inpatient bill. And in the report, they also said that there is evidence of this portion of the bill that is increasing in share. Right. Moving on to a second on a second item on this report, basically there is a media report recently that indicated that effective 1st of May, all insurance and takaful operators must cease offering of medical and health insurance takaful products, MHIT products, with excessively high annual claim limits. This is in line with Bank Negara's directive. The purpose of this is to curb, you know, the cycle of escalating private medical costs and insurance premiums, forming part of the broader reset strategy. So while the BNM data suggests that, you know, this 150,000 per annum actually covers for 99% of claims, we believe the remaining 1% of cases often, you know, disproportionately contribute to the healthcare sector's EBITDA. So hence, you know, any introduction of claim ceilings is likely to cap, you know, revenue per patient growth moving forward, forcing, you know, providers to actually pivot towards more cost discipline. Right. That's it. You know, no changes to our sector top pick. KPJ is still our preferred pick amid these tightening policy conditions. We do believe that the convergence of you know, regulator HSS data, the push for DRG-based billings, the long-term structural demand for from an aging domestic demographics will actually benefit established players that can demonstrate cost leadership. So, you know, for KBJ's point, you know, despite them generating 40% less EBITDA per inpatient compared to peers, due to, you know, the larger proportion of secondary hospitals in their network, if you were to look into their EBITDA margin, it only trails by 2 to 3 percentage point compared to other peers. And that actually, for us, underscores structurally stronger cost efficiency even at a lower price point, making KPJ well aligned with the reset framework. The other thesis for KPJ remains unchanged. Number one, it does have lower exposure to medical tourism, which is at about 6% of revenue, versus peers at about 14-15%. That actually gives them, you know, making them more defensive and a domestic focused play. But with any rebound in international patients, it actually offers a stronger incremental upside. Number two is its secondary care focus actually places it as a key beneficiary of MHIT spillover, making them able to, we think they are able to capture volumes from the price sensitive M40 segment, while also limiting exposure to insurance-driven down trading. So that actually could bring up their utilization for its secondary hospital network. And number three, ongoing expansions into Center of Excellence that actually provides clearer visibility on how they are going to improve their revenue intensity, which is through higher complexity as well as high margin care. So that said, we are maintaining our weight stance on the healthcare sector for now. Topics KPJ, LAC as well as Duo Pharma. That's all from me. I'll pass on to the next presenter. Thank you.
Thank you, Eddy. Let me move on to a company update on MPI. So they announced the results 2 days ago. I think this is update on the briefing post results. I think the management is pivoting to the various new high growth mega trends like humanoids as well as silicon carbide and gallium nitride, semicon material in terms of packages, and they also paint a highly bullish outlook for FY27 and 28. Now we do expect a stronger showing into fourth quarter FY26 June, as well as FY27 as a whole, basically driven by the recovering automotive demand, as well as a sustained strength in the server segments. Now the utilization rates for all of his plants should hit a optimal level into the second half of this year, and that should provide operating leverage as well as a sufficient cushion against the rising input costs as well as the forex headwinds. Now, the industrial segments now accounts for about 50% of 3Q revenue, and the contribution from AI servers rose to 13% from 9% previously, providing superior margins over the traditional legacy packages. Now, the automotive segment now stands at about 37%, followed by consumer communication of 9% and PC notebook of about 3%. Now, they expect the 2026 to 2030 5-year growth cycle to be filled by the second wave of AI server demand, specifically in the power packaging using silicon carbide and gallium nitride. These materials are essential for high power density, as also the switching efficiency required, for the high voltage step down for the GPU as well as the CPU. Now, additionally, the group is also positioning itself to the next growth catalyst like sensors, memory, and power packaging, mainly for application in the humanoids, robots, as well as automotive autonomous vehicles. Now, operations in Malaysia and China are expected to reach optimal utilizations by second half of the year. These are of course supported by resilient demand both in China as well as in Malaysia. In Thailand, management aims to expand the NOR flash technology into CPU memory. The new acquired acquisitions in Thailand, Bangkok. This is what they bought from Infineon. The power packaging and sensors are also in the pipeline for the next expansions in the Bangkok plant. Meanwhile, the Suzhou factory is undergoing qualification and is poised to become a growth driver into FY27-28. As we speak, the qualification as well as certification process are ongoing. They spent about 198 million capex in the quarter itself, up from 156 million in the second quarter, as we continue to scale capacity as well as invest in technology. Now we do raise our earnings forecast by about 5 to 6% for the next 2 years, given the sustainable profitable contribution from KSM Bangkok. This is the new acquisitions, as well as a bullish outlook overall, shared by the management. Now, consequently, this leaves our target price to 50 ringgit and 70 cents. It was 43 ringgit and 80 cents previously. This is after we leave our earnings forecast as well as tagged to a higher P of 33 times now. It was 30 times previously. We do include 2% ESG premium into the target price as the ESG score is above the country median. We continue to like the stocks, and we think the current upcycle will continue to benefit, and the earnings will continue to transpire in the next couple of quarters. Reiterate buy on the stocks, higher target price of 50 ringgit and 70 cents. I'll just pause here and pass on to the next speaker. Thank you for listening.
Thank you, Meng. Morning, everyone. This is Vanessa from the warrants team. So I would like to share with you on some of the active warrants yesterday. So yesterday was I would say it's kind of heated in the market. All right. So yesterday for RHB, we actually had 3 very active warrants, which was YTL C2K, Gamuda C4I, and Solarvest C2. All right, so for all these 3 warrants, right, they do have a similarity, which they actually had gained change, a positive change from the previous day closing. Okay, so for example, YTL C2K, it actually went up by around 64.3%. Okay, with the previous closing price at around 7 cents and the bid price yesterday closed at 11.5 cents. So why do people like this YTL warrant, right? Very likely is due to a long expiry date in August, and also very sensitive specification. I would say there's only 2 ticks of responsiveness and effective gearing of 4.7 times. So not to forget, Gamuda C4I also gained 44.4% change from the previous day closing, with a sensitivity of about 5 to 6 ticks, and also effective gearing of near to 7 times. Yeah, and the third one would be Solarvest C2. I forgot a positive sign. So gain 14.3% with an effective gearing of 5 times. Okay, so these are some of the active warrants yesterday. So for today, if you're looking into the active warrants, or you're looking into the stock with momentum, it will be great if you can actually use the RHB website, so that whenever the stock is moving with strong momentum, and you think that it's a good time to enter a position together with the price metrics, then this will be handy, I would say. So the warrant metrics, so this is a snapshot on RHB website, YTLC2K. So as I mentioned, 2 ticks of sensitivity. Sometimes it's really hard to imagine to expect how it's 2 ticks. Okay, so for sensitivity of 2.1 ticks, you can actually see it translated in the price metrics. Yeah, so 2 ticks, which means 2 cents movement in YTL corporation mother share, will actually cause this warrant to move by 1 tick. Yeah, so imagine the warrant, it's less than 20 cents. So 1 tick performance, which is half a cent, will actually give a better percentage gain in terms of percentage compared to the shares, right? So if you're in the correct, if you had the correct view, so this type of responsive warrants will actually bring faster results to you, faster outcome. Okay, so today, if you're in line with Eddy's view on the healthcare sector, so he actually mentioned on KPJ. So KPJ C36 is actually one of our core warrants. It's actually the newest KPJ C36 from RHB, so with an expiry of 29th of October. So this is the reason why you have to dial into Morning Kappa every morning, so that you actually get some inspiration on what to trade. Okay, so for example, today KPJ, so this is actually the price metric that is going to be refreshed every 30 minutes on our website. So if you are bullish and you would like to enter position, for example, 3 ringgit and 37 cents, then you know that this warrant is going to be priced at 10 cents and 10.5 cents. So for you to actually take a profit, you can actually set a TP in your mind on the mother share, and then you can actually know where is this warrant going to move, if it's going up or if it's going down. So for if it's going down very quickly, then you know that you have to set a stop loss on that. And on the other hand, on the technical side, Aiman also actually had shared on Maxis. So Maxis C59, we actually have garnered some of the interest yesterday as well. So if today the bullish momentum, the I would say the bullish setup is still valid, then the sensitivity of this warrant is only at 4 ticks. And if you look at the price of this warrant, it's about 6.5 to 7 cents. I mean, for now lah. Okay, so it's actually less than 10 cents. So you can actually expect the effective gearing and also the percentage gain of this warrant is actually quite powerful. All right, so these are some of the warrants that you can actually have a look today, in line with all the fundamentals and also technicals analysis that will be helpful for you. All right, so if you have any questions on warrants, feel free to call this number. So I'll be able to attend to your queries, and thank you for dialing in today. We are happy to have you. So we'll see you tomorrow at the same time, 8 a.m. RHB Morning Cup at 8. Thank you.